welcome out to Maverick Currencies midweek update, April 19th. Corey here with you. As always, let's jump into it and talk about what's happening in the markets, what is upcoming as far as economic reports and things that we can possibly trade. So there's not a lot of changes since last week. We've talked about how equities are on this run higher. They've been pushing through any quote unquote bad news. What I would be watching for personally is the exhaustion blow off top. And the reason I think that's coming, so when you think about a topping pattern, could price action just roll over? Could it just kind of go out with a whimper where it's just kind of moving up and then it just proceeds to kind of trade down, and there was nothing that really signaled the top? It just kind of rolls over. Well, it's possible, but when sentiment is very strongly against the move, sometimes sentiment is overwhelmingly on the side of the move, right? Everybody's bearish and the market's going down. Everybody's bullish and the market's, doing what was expected of it. Here, I think we have sentiment offsides. So if you look at sentiment, it is very negative, very bad sentiment, yet the markets are pushing higher. And that leads to a lot of people off sides and on the wrong side of the market, leads to that capitulation, that big exhaustion surge. Because if people are negative on the market, what's happening? What's the positioning? Well, they're underweight equities, they're short equities. If you look at hedge fund positioning and so on, that can create that short squeeze. So the last buyers will really be the people that don't want to buy but are forced to buy, margin liquidations and all those sorts of things, because as price goes up, they're forced to close. And so it accelerates at the end, and it really puts a punctuation mark at the end of this run. It's a big exhaustive type of scenario, and that's what I think will finish this surge higher. So envision for yourselves what it might look like if we get that big spike, that big finish, and usually it'll kind of have a parabolic curvature to it where it's more steep towards the end, and then it's this blow off top phase. Oftentimes volumes will surge, so the amount of volume traded will be higher than what you had recently seen throughout the entire move. So if we get the big spiky finish, the big volume surge and so forth, to me that would signal that we are basically finishing up the ball game, that the 9-inning game is coming to an end. It doesn't have to be that specific day. It might be within a couple of days of that and so forth. It's not like you can pinpoint the exact moment it happens, but you'll know it when you see it type of scenario. So watch for that exhaustion finish. Something that I'm watching closely for that I think could materialize here within the next couple of weeks. US dollar's been in a little bit of a short-term downtrend, bouncing back a little bit today, but I've emphasized, well, I've been bullish on equities, and the flip side of that has been bearish on the more defensive kind of hideout plays. So I looked at it as, what did they rush into following the bank run? That's what I think starts to come unwound here. And so last week, kind of stuck my neck out a little bit with a crypto and precious metals bearish call, feeling like, in fact, crypto gave a nice exhaustion high signal, and it's come down. I think it's down 3 to 5% or whatever this week. Precious metals have started to roll over a little bit. Not a lot, not as much in gold or silver, but started to just tip over. And again, a little bit of an exhaustion high signal. So sort of what we're talking about in equities, well, this is the inverse. So I think equities are still on their way up, and crypto and gold and some of these safe haven assets should be on their way down. If the market surges and gives us the exhaustion high, that's the moment where I think gold specifically would be more of a buy point for the next trade. But I think gold, precious metals, cryptocurrencies, Bitcoin, Ethereum, they should all correct here for another, call it again, a week or two. It kind of anybody's guess. We have to wait and see when that exhaustion forms. It might be a little bit longer out than we expect. It might come rather quickly. This is probably a rolling recession more than some deep, dark recession. When people hear the word recession, they kind of freak out as if it's like it's economic collapse and calamity. It's not really what happens. Most recessions are pretty shallow, meaning, you have a little bit of a slowdown in the economy and then things pick back up. And it's not like, every business is on the verge of bankruptcy or something. Usually recessions are just kind of a normal slowdown. You temporarily slow and then you pick back up a short time later. So I think that's where we're at, where it's just kind of gravitating through. And if there is something that happened with the bank runs and the little mini bank crisis that we had, it is probably going to lead a little bit more towards less loan growth, slower economic conditions. The odds of recession are still pretty high. As we look at economic numbers, Empire State Manufacturing, a big beat, expected to be negative 17 and came in positive 10. Canada CPI month over month a little lower than expected. In the UK, inflation came in for the year over year number 3/10 higher than expected. So Canada a little bit better. I'd almost call it flat, but if you look at the pound is the best performing currency, and it's probably on the back of that. So that's a relatively big miss, and the inflation coming in hotter than expected means that basically the Bank of England would be more likely to raise, that they have to be more on guard as far as inflation is concerned, and it should fuel a pound upside rally. Now, the question is, how quickly does that get priced in, and how many more rate hikes, or how does this change the Bank of England's monetary policy going forward? Well, we'll have to wait and see a little bit, but I'm not surprised it's up. And as we look at the charts of the pound, pound sterling looks pretty good for more upside across most currency pairs. So we'll look at that a little bit more as we go as well. So as I said, you're seeing a little bit of an unwind in these commodity plays, the crypto, gold, oil. You can see crypto down 5%. I said 3 to 5. It's a little worse than I remembered, but down about 5% on the week. Equities flat so far and pretty darn quiet so far this week. So let's look at a few different things here. Now, I mentioned a little bit of an exhaustion high. You have a bit of an example back here. It's not perfect, but a little bit of an example where you can see how we turned vertical and we really exploded these last couple of weeks of the advance. And then you can see the big gap up on quote unquote good news in the S&P 500. And we saw the largest volume spike for the entire run. Do you see how those pieces came together where you had an exhaustion high? Now, what did the S&P do from there? It proceeded to decline. I'm not a big Twitter guy, but I did tweet about this on that exact day. I highlighted QQQ, which had an even better kind of signal than this one, than the S&P 500, but the same principles. I said, look, the NASDAQ, the S&P, they look like a big exhaustion high, expect a big reversal, and away we went to the downside. Now, look at this kind of going forward here. We're still in the upward phase, but if we make a big run here, turn a little bit more parabolic, get the big exhaustion high here. Notice how the volumes are all flat and normal and nothing big there, but you start to see some big volume bar up here that stands out, much bigger than the ones around it, and prices up in the, up on the highs and quote unquote good news that's fueling that move, etc. That's what I'm personally watching for. And if and when that happens, I believe it will happen, When it happens, I will get far more defensive, much more negative on equities, and at least at minimum think that the upside is somewhat done. Now, as we look at crypto and currencies in general, we talked about the British pound, sterling being the strongest currency so far this week, Aussie in second place. Weakest currencies, Japanese yen. That's a place where they were hiding out. I don't like the defensive plays. Now, US dollar had been down, 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 so having a little bit of a bounce back, but that doesn't really concern me much. And then, like we said, some inflation data out of Canada that a little bit lower inflation, which means maybe the Bank of Canada takes a step back. Again, if your inflation numbers are high, your currency's more likely to rise. If your inflation comes in lower than expected, your currency's more likely to fall because they're taking their cues off of what does this mean for central bank rate hikes or cuts and so forth going forward. So cryptocurrency land, everything negative, down about 5% across the board. So not a great week there for crypto in general. Now let's take a look at a few different things here. If we think about where the markets are at and think about the slope, we talked about this last week that really we can probably start adjusting this to green because the slope is turning. Notice the upward slope, upward slope, upward slope here in these different areas of the market. So slope is more turning green. You can see the S&P, a recent bullish crossover, international markets, a recent bullish crossover, and such. Let's take a little closer look at a few of these charts. So international markets still on an upward trajectory. Same way we formed exhaustion highs up here, I think something similar will happen in the future. So nothing really to add. It's just somewhat steady as she goes. Now you could have little pullbacks and things, but I don't think there's anything too major in place. Now if we look at crypto rolling over hard, you can see in terms of the price action here, expectations from my vantage point were for a downturn in crypto. We spent a good bit of time this class last week. We do the midweeks on Wednesdays, and I spent a good bit of time looking at those crypto charts. So what did they signal? Well, let's just pull up the chart. So if we come over to the charts here, you can see GBTC, a Bitcoin ETF, and this is what we had highlighted. This to me was 1 week ago, right? This is 1 week ago we talked about the exhaustion high, that you'd been ramping up, that noticed the volumes, and then the explosion of volume after you were really quite extended on quote unquote good news for the crypto market. And we've proceeded to trade, pretty sharply lower from that point on as you look at crypto. If you were to look at Bitcoin's chart versus the ETF, similar characteristics. It wasn't quite so obvious, but same type of idea and dynamic. And we said, look, we're willing to stick our neck out here, and ultimately the market will judge you, and it is your judge and jury, right? You're either right or wrong, and you have to come in here and say, well, we got this call wrong or we got it right. Well, this one we got right, from about 30,500 to 29,300, down about 1,200 so far in Bitcoin. Now, might we bounce a little here? Prior breakout zone, could this be a little area where we bounce? Potentially, but I still suspect there's more room for this to continue to correct back in price. So even though the first trade was a good one down to here, if you bounce a little, I would use that bounce to trade the next wave of selling. I suspect if you adhere to Elliott wave principles or whatnot, I'd sort of expect an ABC style correction or some further deterioration here. And I think the Bitcoin crypto markets in general are likely to do that. Now, we also talked about gold, and gold, you can really somewhat lump these together. They're not perfect correlations, but the idea behind why you own gold and why you own Bitcoin are very similar. If you ask someone, well, why do you own gold? What is your purpose for owning Bitcoin? They will speak to a lot of the same concerns, right? Well, I'm nervous about the US dollar. I'm nervous about the dollar losing its reserve status. I'm nervous about how much money they print. I'm nervous about it's a safe haven, and it's really something you go into because you hate the other side of it. It's almost a political type of thing. You vote Republican because you hate the Democrat. You vote for the Democrat because you hate the Republican type of thing. You vote for gold and Bitcoin because you hate the US dollar. You hate that they're printing so much money. You hate, it's kind of that type of mode, is ultimately why a lot of people believe in these. And so at times, they will be heavily correlated. And I would say that times where these have heavy correlation is when there is fear on this side, right? You go into these when you're fearful about something else. And it was the bank situation that fueled this. So the fear over banks, over deposits, over more money printing. Don't forget, the Fed's balance sheet went from 8.9 to 8.2 trillion, I believe it was. It took them a year to reduce the balance sheet that far. As soon as the bank crisis hit, within 2 weeks, it was back to 8.7. They came out and printed a lot more money, in essence, and almost undid all of the quantitative tightening in terms of balance sheet reduction, in terms of money printing and so forth. They almost offset all of that in 2 weeks over this risk and this fear. So on the other side of this was this. And was it a great environment for gold and crypto? You bet it was. These things worked their way higher in the midst of that mini crisis, right? I believe, and I talked about this last week, that last week was, in essence, the exhaustion high, that we've basically put in the exhaustive upward push, and now we should get a bit of an unwind. Does it mean that it's ready to collapse, that gold is going to fall dramatically for months on it? No, no, no. It's a trade, right? It's a trade that, hey, a lot of that fear probably got overdone. They saw the boogeyman, the worst case scenario. They started dreaming about, well, what could this mean and how bad could the collapse be? And their sort of daydreams got a little carried away. And so that's what happens. You revert back to the mean, but you overshoot the mean, right? You don't just kind of get a little nervous, you get really fearful. You don't sort of feel good, you feel great, right? That's how the markets work. They get too optimistic and they get too pessimistic, and they get too optimistic and they get too pessimistic, and so on. We're in, hey, they were a little too optimistic about what this means going forward for gold and silver and Bitcoin and Litecoin and all these different things. And so, my opinion, we get an unwind of that, a temporary unwind for a couple of weeks, a corrective phase. I'd put gold and silver very much in the same camp as crypto, where I'm anticipating some form of a correction, some form of an ABC style downturn. How bad does it get? I don't know. Again, you'll probably bottom in something like gold when the market puts in its exhaustion high. That would be a correlation that I'd sort of be looking for. And it won't be to the penny and it won't be to the day, probably. But around the time that the market is forming an exhaustion high, it's probably about the time where gold looks attractive for a re-entry opportunity. Let's move on to crypto, or to FX. As we look at different currency pairs to trade, just keeping things simple, we're on a daily time frame. let's just say bull or bear. Well, US dollar, bear. Big picture, we're still in this little downward trend. We've had a little bit of a bounce this week. I think we're still just in a consolidative phase, but for now, the US dollar looks like it should work its way lower. Japanese yen, that's again one of those defensive pockets of, hey, there are periods of time to own the yen. There are periods of time not to own the yen. If you tell me that the markets look like, equity markets look like they're going to run higher, that we're going to go into a little bit of a risk on phase for a while, that is not a time to own the yen. And of course, it's not acting well. About what time will the yen bottom? Well, probably around the time where equities top. So still bearish on the yen. Euro still looks pretty darn solid. You can't really argue with the price. The price action, forget that it's the euro and just look at the price action and you say, how strong is it when after you've advanced for the past couple of months and you're currently near the highs, they can't even put enough downward pressure to get a pullback. You're not even correcting back. You're correcting sideways after all of this. Euro looks great. Euro, as far as charts are concerned, Euro looks like the best of the bunch. Swiss franc, I take that back. Swiss franc and Euro. Let me put them together. We've talked about this for a few weeks now, and they're the best charts out there. So if you've been buying anything, Euro and Swiss franc have been the best of the best. Again, I'd say the same thing about the Swiss franc. Even after advancing quite a long bit, you're not even giving ground. You're not even pulling back to these moving averages. Some people might get nervous about that. That tends to lead to even more upside. It speaks to that there is still a bid, a lot of buyers under this, and maybe more to the point, the shorts that want to get out, they're not even given a pullback, right? The shorts are probably waiting for a dip so they can cover their shorts and not lose so much, and they're not even getting it. This just tends to lead to another sharp spike. Now, it may not be, in both the case of Euro and Swiss franc, don't expect it to be long lasting, but for a couple of days, you're likely to spike out of this further. Swiss franc did have a little bit of an exhaustive type of day here, which led to the current correction. But again, it's not even correcting back in price, it's correcting sideways in time. There's really two types of pullbacks, two types of corrections, right? You can correct down in price, or you can correct sideways in price. Either way, you allow these moving averages to catch up. The stronger of the two is to just go sideways. You're not even giving ground. So see how the moving averages are catching up. You are in a correction, but man, you're not even giving ground. That is very bullish. British pound, we talked about, strong, and the economic data still supports upside. So those right there are the best of the best. I mean, that's it. We'll finish right there. Now, everything else has some flaws, has some potential, but has some flaws. CAD, I want to come back to this one because I'm intrigued by this. Aussie, pretty ugly. Kiwi, pretty darn ugly. The thing that I don't love about shorting Aussie, Kiwi, CAD, well, they're a little bit more risk on, and I sort of expect a little bit more risk on, right? So am I surprised the Aussie's been rallying for the past 8 days or so? No. Have I been buying it aggressively? No. It's just an ugly chart, but one that's maybe going to work its way out of that. Out of them, I like CAD the best. Now let's talk about why. Perhaps some of you have already caught this with your eye. If we were to extend this line over, what do you notice has recently happened in the case of CAD? Well, we've retested a prior significant zone, so you know where resistance is. We can see that there was a deep correction followed by the retest, and now we're in a shallow correction. So that is, in essence, what a cup and handle or that type of dynamic looks like. If you don't want to call this a cup and handle and you say, well, I see more of an ascending triangle, I'm fine with that too. But either way, it's bullish, right? It's more bullish than bearish. You have resistance. You've successfully retested. The first drop is a big one. The second drop is a small one. And usually on that second drop is a fantastic risk to reward towards buying. So let's look at CAD here from that angle. If we say what was the peak, well, the line right up there is about 0.64 or 8624, we'll call it. Okay, that's about the peak. And the bottom down here is about 0.8365. So that is the size of this in the CAD. Now remember, this is the CAD against everything, against the US dollar, the yen, the Aussie, the Kiwi, the Swiss franc, the pound, the euro, etc. Now, that's the size of the cup here. So if we were just looking at this technically, we'd say, well, the difference between those is the size of the cup. So let me pull up a calculator. And we say 0.8624 minus 0.8365 equals 259. Next, the handle is usually about 30% of the size of the cup. So we know what size the cup is. I'm just going to multiply that by 0.3. That will tell us what about a 30% move is. And it's 0.0077. So you're at about 0.077 below this number is about where CAD should encounter buyers. Well, let's take a look at it. 0.8624. That puts us at about 85.46. What was the low today? Let me move this. 85. What did we say it was? Whoops, I just forgot. 85.46. The low today, let me move this. The low today up there was 85.53. Pretty darn close. But the point being that you're basically down here at about where the handle should be formed. In other words, CAD shouldn't really go much further than this. It should, I mean, this is a correction where the CAD inflation number is a little bit lower than expected. Yeah, I'm still a buyer of CAD much more than the Aussie and the Kiwi based on the charts. And frankly, yeah, we pulled back from resistance as we should have done. But this is exactly where the best risk reward probability, a lot of those factors line up. So right in here, what I envision is this type of scenario. Again, as we always say, every week I say, as I detail these things, the market will ultimately be the judge and jury, right? This will either be the right call or the wrong call. This is how I trade, works for me, doesn't work every time, but works over time. So as you look at the CAD, this is basically around the buy zone. We take that to the next step and we say, okay, let's look at some CAD pairs. And what do we want to buy? Now, this is on the daily chart, but we're going to work our way in. Another rule I have is if I'm buying something on a time frame, I need the next longer time frame to agree. So we're doing daily chart analysis because I want to know where the next few days are going. And then I come in and really start looking at different time frames to trade. So let's start with like a 4-hour. And if we look at CAD yen, decent, okay, on the 4-hour chart, high basing, certainly not against it. Euro CAD, do I want to get short the euro? Not really, right? We said that's the best of the best. Do I want to short the Swiss franc? No, that one's good. And do I want to short the pound? No, that one's good, right? So I'm really led towards we're either going probably CAD against the Aussie, the Kiwi, or the US dollar. I think that's the most likely. Let's start with the US dollar. 4-hour chart, been in a correction, kind of extended a little further than it would have, could have, should have here. Maybe this is a little bit of a false move and you sink back in. This old support, remember I talk about support and resistance, it's not uncommon. I look at support and resistance not as though it's a flat, hard surface. I look at it like it's a mattress, because so often price will just squish into just to trigger a few stop losses and then turn the other way. So ultimately it was resistance, but it's like a squishy mattress. It pushes its head through, right? And markets do that because if a lot of stop loss orders are lined up right here, they hunt and peck those orders, and just it's the frustrating game of markets. But if you know that, well, you position for it and you look for these little kind of false moves beyond. I trade a lot of false moves in the well in my later years of trading, in the last 10 years. First 10 years, I probably expected support and resistance to be too strict and too hard. Now I trade a lot of these little pushes into and false little turns. But Aussie CAD, well, we'll come back to that perhaps. Let's go. Well, I want to look at Aussie CAD. That doesn't look great. And Kiwi CAD. So out of the bunch, Kiwi CAD really looks the best, really at that and sort of squished into there, but still beyond that 50 period MA. If we look at the 1 hour, it's extended a little too far. If we look at the 12-hour, that's still bearish. So I think the one that's most actionable, more like right here, right now, would be Kiwi CAD on the 4-hour time frame. So 12-hour chart. If I'm trading the 4-hour, I need the next longer time frame to agree with a bearish trade. Is the 12-hour bearish? Yes. So check. The 4-hour? Yes. So I can trade that. And let's look at that again on the 4-hour chart, because you're right pressed up against that resistance. Basically, the idea would be shorting here at 83.48, stop above this zone, in essence, kind of a little exhaustive high, and trading this back to 83 at least. You know, sort of a 48 pip or so potential profit, which on a percentage basis is pretty good. Let me pull up a Bollinger Band chart criteria to it as well. If you slap Bollinger Bands on the chart, you can see that hitting that upper band right at the 50 MA. Okay, I would trade it again from 83.48. I think it's a good risk to reward down there to 83. So interesting little chart pattern set up there in Kiwi CAD. But ultimately, I do think this is the area to basically be buying CAD to the upside. And next week, we'll come back in and review our work, review our analysis. Still, for me, the same general thesis that I had last week, which is equities look like they're pushing higher, that we're on more of a risk-on mode. That gets us there as well. Things that I like on the downside, well, ultimately, gold, Bitcoin, things that are defensive hideout areas. The bond market's been trading lower. US dollar is kind of a safe haven. It still looks weaker. Japanese yen still looks bad. You know, these are things that look more poised to go to the downside. Charting wise, the best are still euro, Swiss franc, and ultimately British pound. All look pretty darn good on the upside trade. So as I look at a breakdown of markets and where things are and the path of least resistance, think about the pain trade. Who's in pain? Where is that pain? And And how does it filter through? Well, ultimately, these, I think, can inflict more pain in those directions. And that's how I would be looking to trade it. All right, we had a request for pound USD. So let's do it together. Pound USD, let's come back a step. Daily chart, bullish, right? Pound bullish. Here's the prior breakout zone. Look at the mattress idea. Resistance, we squish into, and then we bounce. We squish into, and then we bounce. Okay, that's how price action works. So don't think of it as a solid foundation. It's more like a squishy mattress. You normally just kind of push down into, and then it springs you upward. Maybe a trampoline is the best way, right? When you land on the trampoline, it gives way a little bit, and then it springs you up. Do I like pound USD to the upside? Yeah, I think this is worthy of further inspection. 12-hour chart, hit the Bollinger Band buy setup, and you'd already be in it. It'd already be advancing a bit. 4-hour chart, mixed bag. 1-hour chart, starting to work its way higher. So 4 hours, a little bit more choppy and sideways, but most everything you'd kind of check the box of 1-hour chart is more bullish, no doubt. 4 hours a little more neutral, but bullish, 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 bullish. All likely. When you get that, when you start checking all the boxes, that tends to lead to more upside. So pretty good from that standpoint. And what about pound Kiwi? We also had a request for. Do the same thing. We'll just take it in from longer time period to shorter time period. So pound Kiwi, daily chart. I don't love that it's kind of falling off the highs, leaving a long upper wave. And you did have a little bit more of an exhaustive phase here. So that one doesn't look quite as ready just at the initial outset, but we'll see. 12-hour still looks really solid. 4-hour chart still solid. I mean, you can see just ascending triangle type of dynamics here. Really pretty bullish overall. And then the 1-hour chart still pretty bullish. You know, you spiked and now you're kind of falling off. Here's what I envision, just kind of what I saw initially. I wonder if this isn't going to be in a little bit of a, it's still bullish, but maybe a little choppy in here before it starts to move higher. So just worried that you might get a little ugliness first before you move up. But ultimately, does it move up and out from here? I think that's the path of least resistance. And again, whenever you're thinking about trading, sort of think about where the pain is, and the more pain there is, the more it can fuel to the upside. That's, you know, when people are losing on the downside, what do they have to do? Well, they have to sell. They're forced liquidations and so on. And so selling begets more selling, and it further fuels that downside move. Same thing happens on the upside. There's shorts, there's people losing to trends that are moving sharply higher, and as they start to really extend, the more pain there is, the bigger that exhaustion surge tends to be at the tail end of it. So for the rest of this week, we've got our currency recap on Thursday, and then this weekend we will send out the currency trading room over the weekend as well. Thanks everyone for joining us in this currencies midweek update. Have a great rest of your week, and we'll see you next time. Goodbye, everyone.